If you're looking to consolidate debt and credit cards into a single loan, you might have come across Prosper. I've spent years in the lending industry, and I want to use that experience to tell you what you need to know to determine whether Prosper is a good debt consolidation loan for you. I'll talk about whether the company is legit, how much you can borrow, how hard it is to be approved, what kind of credit score you probably need, what the APR on a Prosper loan is, and whether it's a good idea to use Prosper to consolidate your debt. Let's get at it. Prosper was established in 2005 as a peer-to-peer lender. The idea was that individuals with money could come to the site and lend money to people who needed loans. It would be a good investment for the individuals, and the company would be able to avoid the regulatory scrutiny of traditional banks and lenders because they weren't the ones lending the money. The model didn't stick around. You can still invest in loans through Prosper, but the actual lending is being done by WebBank, and most of the money for the lending is not coming from individuals like you and me. The fact that WebBank is on the hook for the lending process means that they are closely regulated. You can have confidence in that when borrowing from Prosper. So how much can you borrow from Prosper? You can borrow between $2,000 and $50,000 from Prosper, but the average amount that they lend is around $14,000. Of course, that average probably doesn't mean much because you have a bunch of people getting smaller loans and a few people getting bigger loans. Unsurprisingly, one of the most important factors determining how much Prosper will lend you is your income and how much of it is claimed by other expenses. The average payment size for a Prosper borrower is 5 to 6% of their monthly income. If you take your monthly income and multiply it by 0.055, that will give you the rough idea for the payment that Prosper loan might be for you every single month. Most lenders have their own process for determining who to lend money to, how much to offer, and at what interest rate. What makes Prosper a little different is that they need to communicate the quality of the people they are lending to potential investors so they can determine whether to invest in a borrower. Prosper uses a combination of things like a credit score from TransUnion, your income, and your expenses to assign you a Prosper rating. The Prosper rating has 7 grades, which is meant to explain different credit risk. Between 55 and 60% of all their loans are going to people in the top 3 grades. What credit score is needed for a Prosper loan? If your credit score is below, say, 620, you might need to consider including a co-borrower to the loan in order to be approved. Both you and the co-borrower would be on the hook to make the payments. I am guessing that at least half of their borrowers have credit scores above 680, and probably a significant number of them have credit scores above 700. What is the APR on a Prosper debt consolidation loan? Prosper caps its APR at 36% for a host of historical, legal, and regulatory reasons. The most recent reports say that their average APR is nearly 19%. If you have a good income and a high credit score, you might get an interest rate as low as 12%. If you're looking for a lower loan amount or have damaged credit, you can expect to pay 30% or more. What fees does Prosper charge? Prosper has a whole host of fees that are attached to their loans, but most of them are avoidable. The one fee you can't avoid is the origination fee, and that's taken out of the proceeds of the loan when you take the loan out. The fee ranges from 1% to 8% of the value of the loan. It's important to note that the origination fee is represented in the stated APR. In other words, the APR includes the interest charged and the origination fee. Prosper also charges a fee if you want to pay by personal check, a fee if your payment is late beyond the 15-day grace period, and a fee if your bank account doesn't have enough money when they attempt to withdraw the payment. Is it a good idea to consolidate your debts with Prosper? Consolidating your debts can be a great way to accelerate your efforts to get out of debt, but only if your new loan has a significantly lower interest rate than the debts you currently have. Compare the interest rate on the existing debt with the APR of the Prosper loan. If those interest rates are a few percentage points higher or more, debt consolidation could save you a lot of money. You will also want to figure out what the payoff date is for your existing debts. If you have any debts that you think you can pay off within a year, you don't want to consolidate those loans. Why? Well, when you consolidate, you create a new loan that will reset the term length. You don't want to take debts that you would have been able to pay off within a few months and consolidate them into a loan with a 3 or a 4 or a 5-year term. And before you take any loan, make sure you apply to at least 3 or 4 other companies. You owe it to yourself to get the lowest rate that you possibly can get. The only way to know for sure if you are getting the best deal is to apply around. At the Yukon Project, we've tried to make that easy to do. If you visit our marketplace page, you can apply to up to 40 lenders at the same time with a single application. And applying won't affect your credit score. So you'll be able to see a lot of offers and determine which one is best for your particular circumstance. Prosper might very well be the debt consolidation loan that can help you in your effort to pay off your debt. If you have ever used Prosper before, consider leaving a comment below so others can benefit from your experience. Please support our efforts to bring you reliable financial information by subscribing to our channel. Thanks for watching.